This is a Nasdaq Futures Technical Analysis, 28th of December 2022. Looking at the 4 hourly time frame, we've got this channel. The price needs to decide very soon whether it wants to break down. This is also a potential bear flag, so a potential bearish pattern, or if it wants to protect and bounce up from here. The levels to watch are the 10,870, which is the recent low on December 22nd. More importantly, because the market tends to fake out, so I'll be more looking at the 10,800, because just above it is all the CPI gain that we had on 10th of November. Okay, this is this big Thursday move. It's a 4 hour candle. It's 5.19%. I believe some of you may remember that Thursday after the inflation reading, where the market just took off and blasted off. And because there's a lot of people that took longs throughout this period after this upstick, then a lot of them have stops below, technical stops, algorithms and traders below below the 10,800, and the institution selling the trades will probably or may want to stop them out unless there's a stronger force of buying over here to protect this channel or just close to it. Because that CPI gain can also be hit, those stops can be hit. Those that want to look further down can look at this low over here, okay, which is the final line in the sand. You can say at your consideration that's 10,636, and in this case, in this time frame, we would want either two consecutive 4 hour candles to close below that line, below the 10,636, or two daily candles to close below it to confirm the bearish movement upcoming next. Okay, if we are to protect, okay, if you see, for example, one, or even, well, depends how early you want to get into the trades, that's up to you. But for some early ones, they might only want to wait for the next 4 hour candle, which will be starting in about 35 minutes. The current one is ending in 35 minutes. So the next 4 hour candle will be quite interesting, and especially the next two, because we might have a sign of a reversal up, as mentioned. If we do, I think the long case, in terms of reward versus risk, I mean, we're open to both directions, but the long side is more interesting, because if we do get that, and let's say we enter above the high of the current candle, then obviously the stop can be much closer to the entry, okay, even below all that CPI gain. So, for example, risking 1.65% and having the stop at 10,772. This is, of course, an orientation. You can pick your own specific stops, entries, and take profit targets. This is an orientation, and the take profit target can be quite extensive, relatively, going for a 4% gain just below this pivot point of December 7th, and leaving even some of the position to go all the way up, first of all, to the 12K round number, okay? Just below it, for example, 11,995. That's already a big gain. That would be a 1 to 5.73. That's going for 9.46%. And you can also go up all the way here because if we do get a reversal here, this top line of the channel should be later tested. You might need to wait a couple of weeks for that, but technically, that's where it seems to be headed. That's already an 8.4 to 1 reward versus risk. That's going for almost a 14% gain while risking 1.65. Okay, so watch this channel, watch the 4 hour candles. Those that want more confirmation, as mentioned, watch for 2 consecutive daily candles closing above or below the this line and this pattern, according to this pattern, and trade Nasdaq at your own risk. Do return to Forex Live for additional perspectives. Thank you.